It is, and it's very surprising and at the same time very depressing. So despite all this great talk lately about putting women on boards and increasing diversity, investors seem not to be walking the walk. So what we find is that when companies increase their board diversity, they actually end up taking a hit in their market value, which lasts for 2 years and it will correct itself, but the immediate reaction is negative.
Is it a communication issue that is at the bottom of this putting women on boards and perception problem, the disconnect between shareholders and the way they perceive the diversity on the board? Because what we know from other research is that having more diversity is actually good for performance.
Well, we actually do not find any connection between board performance and return on assets, which is not surprising. There have been many academic studies on the same subject. We calculated over 140 studies that show absolutely no correlation between board diversity and financial performance. Where the action seems to be happening is it's only in the perception, so in the market, in how investors are reacting.
Actually, you've raised a couple of points. What were the shares of these companies doing before the ladies got on the board, the women became on board members?
Sorry, I can hear you.
What were the shares of these companies doing before the women got on the board? I.e., was there a trajectory beforehand, before the women got on the board, or is it only because the women were on the board, or when the women came on the board, that the shares started falling?
So we control for previous market performance, and what we find is that it is happening after the increase, that when the market value takes a hit. So the companies were doing just fine. So what we do in the study is that we don't compare companies to each other, but one company to itself. So we're looking at company A this year and then seeing what happens to its performance the next year.
I'm sorry to cast doubt on your research, and you've put a lot of work into this, but if you don't know what the shares were doing before the women were on the board, how can you say that when the women were on the board, it is a direct correlation, that the fact that women were on the board and investors started selling down the stock? Surely if there was a trajectory beforehand with the stock falling, that has to be taken into account. And let's face it, boards never change meaningfully unless there's a problem to begin with.
Yeah, so we do control for the prior performance. So for every firm, we control for their return on assets as well as their Tobin skew the year before. So what we're looking at is really the delta in the market value for each company.
Kaisa, can I ask you about the timing of the report? Because if I look at when the study was conducted, 1998 to 2011, is the study a little bit dated? I mean, what we have seen in recent years, a much bigger step up in diversity led by governments, and France has been a great example, pushing forward with diversity at a government level, diversity now at a company level. Haven't perceptions naturally changed in 2019, coming up to 2020, from where they were back in 1998 when the survey started?
So one can only hope. The optimist in me believes that there has been a change, but perhaps the change has been not as fast as we would have hoped. There is some more recent evidence looking at the introduction of board quotas in California example, which just happened last year. And the study finds the same, that the firms that weren't already meeting the quota before the quota was set ended up losing a lot of their market value.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.